Hello, everyone, and welcome to your Onchain update for the 2nd of March. Apologies for a bit of a slow start to this week. I was crook in the first half of it, but we're back in the saddle, and today we're looking at our little friend, the shrimp. And we're going to be looking at wallet balances and, more importantly, their rates of change. How much are the different wallet cohorts on the Bitcoin network changing and evolving? And the main reason is because most of us sit down here as the shrimp or the crab, right? We've got less than 10 BTC in total. That's generally going to classify the vast majority of retail participants, both hodlers who've been here for many years and stacking sats, hodlers who have good privacy practices and therefore are going to show up as shrimp, and also people who are just retail size, which is shrimp. So when we're looking at kind of the crabs and the shrimp, I generally classify that to be retail. And then obviously the higher up you go through institutions, high net worth individuals, whales, all the rest of it. So anyway, what we're trying to do is find out where is the food, where are the prey, what are these different cohorts doing? And really the last time we looked at this set of data probably would have been in the months that followed FTX. So now that we're some distance beyond that, it's kind of interesting to come back and just have a look and see how has the market behaved, what is the aggregate change in overall balances, and what kind of information can we divulge from there. Okay, so we're going to be talking about entity balance changes here, and we're basically going to go from small to large. So we're going to start with the shrimp cohort. The metric we've got shown here is in the orange curve is the actual balance. So this is how many coins are held by these shrimp. This is in aggregate, by the way. Generally speaking, what we're looking for is these periods where it picks up. And you can see post FTX, a very, very significant uptick, right? The shrimp really did step in and see that as an opportunity to stack sats. Some of this is going to be actual buying pressure. Some of this is going to be people just pulling their coins off the exchange for the first time. Some of them just out of pure safety. But nevertheless, we did see that shrimps grew their balance. And this is a historic rate, right? This blows anything else that we've seen through history out of the park by some margin. The previous one that we saw that was this high was back here in July following 3 Arrows Capital. And if I just pull this guy out on the full scale, you can see that the last time we were at the June peak was actually the 2017 peak. So very, very different character here in the sense that people are buying on the way down. Now, we are still maintaining a level that is post-March 2020 highs. Now, remember, this is in BTC units. This is in units of BTC. So the fact that we are seeing an accumulation following all of this chaos in the shrimp cohort, they currently hold about 6.6% of the supply, 1.25, 1.26 million coins. We're at the post-March 2020 buy level, even though we're at prices that are substantially higher. This is down at like 3 to 4K, and here we are hovering around 23, 24. So kind of remarkable to see that this has swelled up quite a bit. The shrimp are legitimately here and they're not going anywhere. It's actually really good to see. I'm not mad. Now, the crabs in that 0.1 to 10 BTC, this is a little bit more volatile. You can see that the shrimps tend to have this nice little baseline pattern that's kind of constantly building. Crabs, because this is 0.1 to 1 BTC, this is a fairly substantial chunk of change, right? So you need to be putting in a fairly substantial amount if we're trying to pick up the DCA buyers. You still get these same peaks, but you can see that we pull down to a much, much lower level. So at the moment, that said, here's your March 2020 level. We're about 50% of the way there. Crabs overall are adding about 23,000 BTC per month. So it is non-trivial, it is positive, and it is obviously much, much larger. You can actually see, if we just take a broad picture view, here's the accumulation phase of 2019. And then that really died down following the January peak. So the crabs really stopped accumulating. And we'll look at this in a second, actually. There's a really interesting chart that describes this. So from January through to, let's say, January, pretty much all of 2021, it was kind of flat, their overall balance. There was a bit of accumulation that happened on the second leg higher and following this dip below. But really, we saw it really swell up following the lunar collapse. That's when things really started to heat up and the crabs started to really pick up the pace. So this kind of shows that within this crab cohort, there's hodlers in there. They understand the mechanics of this thing. They were buying at the lows. They were buying following these major sell-offs. They're still in the market, but they're not exactly jumping at the bit to get into this thing. So they are opportunity buyers, and it's actually kind of good to see. Now, to kind of put that into a bit of an all-time perspective, this metric here is a really cool one we call the yearly absorption rate. So basically, if you've got 100,000 coins that were mined over the last year, and shrimp balance went up 100,000 coins, then that would be 100%. That means that shrimps consumed 100% of the mine supply over the last year. That's what this thing is tracking. So naturally, negative numbers basically means that they are adding to the sell side. So the fish, we'll get to them in a second, minus 50%. That means that if we're mining 100,000 coins, the fish are adding an extra 50,000 coins in sell side. They're distributing into the market. Now, if we look at all three of these cohorts, from shrimp to crab to fish, we are seeing that overall, they are all significant accumulators over the last 12 months, as demonstrated by all of this. So what that actually means for the shrimp, they added 105%. So basically, the shrimp consumed all of the mine supply over the last year. Kind of wild when you actually think about it, that just the shrimp, just the smallest feeders in this market consumed 105% of all mined coins. The crabs consumed 119%, which is kind of remarkable in itself. I mean, you've got two cohorts, therefore you've basically got negative 100% of the mine supply. It's obviously coming from somewhere. We'll get to that in a second. And then you've got our fish, which over here it's about 80%. So overall, these kind of smaller cohorts, up to about 100 BTC, they've been significant accumulators, right? They've accumulated a large chunk, well and truly more than's been mined. Now, obviously, that's coming from somewhere. It's coming out of exchanges. It's coming from whales. It's coming from different cohorts. We'll talk about that in a second. But this is just a nice way to normalize things. Now, the only kind of, give me the craziest idea that could happen here. Well, look, if we look at particularly the orange and the red, these are the retail crab and shrimp cohorts. They tend to be quite cyclical. They accumulate in the bull, they flatten off when the bear kicks in, and when doom finally sets in, they start distributing. Then we get the long, slow grind of 2019, and you can see back here, very, very similar pattern. Well, at the moment, this is a kind of character change. The crabs, note here in the orange, the crabs actually distributed through that period of time. I mentioned before that the crabs through January to January, right, 2021 through to 2022, were very, very light in terms of participation. They were actually selling into that rally, and their balance declined until about December 2021. And then started climbing, but really it started jumping up following Luna. So the crabs kind of represented this smart money hodler type cohort. Really, really interesting to see. And to be honest, good to see, right? It shows that we do have those hodlers in place. Now, the fish to sharks, this is a large balance bracket from 10 to 1,000. Why? Well, for any of you who've looked at previous times, we've looked at fish and crabs. I won't pull up the chart for now, but basically when you see sharks selling off their wallets, it's actually going into fish. They kind of they diverge in two separate directions. So this jump that you see here is combining all of those together. You're basically looking at anyone who's shuffling wallets in two different directions. In fact, you can see it here. So this is our 2020 to 2022 period. Here's the fish, 10 to 100. Here's the sharks, 100 to 1,000. Oh, look, the fish are selling into the bull market. Oh no, they're selling. Oh, but wait, the sharks are buying into the bull market. Wait, what does this all mean? What this actually means is that a whole bunch of people through this process, I mean, what was going on during this 2021 period? It was institutional season. It was Michael Saylor season. It was GBTC season. It was all of these things. Institutional custody and all these different services, they know that when you spend 1,000 BTC or 500 BTC, it shows up on whalealerts.com and gets a Twitter post automated for it. Michael Saylor and these guys, GBTC, and any of these institutions, they don't want a whale alert going off every time they spend their coins. So what you're basically seeing there is custodians breaking down 1,000 BTC into 10, 10, 10, 50, 50, 50, 100, whatever it is, breaking them down to smaller denominations. So when we combine these together, we're picking up all of the early Bitcoiners, right? People who bought at really cheap prices. We're picking up trading desk institutions, institutional grade custody, these types of things. And we're also picking up anyone who's breaking down their UTXOs. So we're trying to capture all of that kind of high net worth trading desk. You get the picture. Now, this particular cohort is a lot more trader focused. You can see that their metric tends to chop around quite a bit. There's a lot of up and down. It tends to follow cycles. It's not really driving stuff, so to speak. You can see a bunch of institutions did buy the top, though. This is the real thing. But they also bought the dip, right? So they learned their lesson after that first cycle. Some of them actually went and learned their lesson and bought that level at a similar kind of magnitude. So this particular cohort has also been quite aggressive in terms of their accumulation, and they're flat at the moment, but their balance is still not declining. So to me, this is kind of telling the same picture. There's a bunch of people who bought the bottom and they're not willing to sell at 23 and a half. They're kind of waiting for, I would say, a next leg up or higher prices. But so far, we just simply haven't seen kind of a distribution kick in. We've seen a stalling, we've seen a slowdown, but we haven't seen a distribution phase. I still personally believe that we're probably too close to the bottom for these investors who are buying this asset to realize those gains. Now, the big curveball is if macro decides to blow up and the stock market's down 30%, will they be selling and liquidating? Yeah, probably. But that's kind of up in the air as to how that actually plays out. That's a topic for another day. Now, one of the more interesting things that's happened post FTX has been the whales. So if we look at the whale transfer volumes, they have gone very, very quiet, more into this choppy, changey type behavior. This is looking at only whale coins from exchanges, and you can see that typically their buy side and their sell side, what they tend to do is they kind of buy a chunk during the lows and then they will sell it all back to the market. They buy a chunk at the lows, they sell it back to the market. They go through these, they don't really go through major distribution cycles. They kind of do this buying and then getting back to neutral, buying and then getting back to neutral. Overall, the whale balance does tend to overall increase. You can see that their balance is just continuously climbing, except really following 3 Arrows Capital. Since then, note that their whole balance, this is kind of this buying and then back to neutral, buying to neutral. Here, it's just kind of chopping sideways, and their balance is very, very much chopping sideways. There's been very, very little momentum going on with the whales, but there's been a whole lot going on with the broken down variants of it. And I just can't help but wonder whether the whales are saying, well, maybe I should in fact be using different UTXOs and breaking down my wallets. This thing here, because it's able to track if people take in a bunch of coins and then break them down to smaller wallets, it can't determine if you're withdrawing 10, 50, 10, 50, 100, like in smaller chunks. It's not going to pick that up. So basically anything under 1,000 is going to get picked up in that previous metric. So using privacy best practices, whales, I think, are starting to get a bit smarter. They're starting to actually understand that if you move 5,000 BTC, a whale alert's going to go off. And I also think this represents a move towards traditional custody. We are seeing a lot more of these whales, so to speak, which are actually institutions, trading desks, and the like. They're professionalizing. They're moving to institutional grade custody type solutions. They may also be doing their own multi-sig type custody, right? These things are going to be evolving after the deleveraging that was last year. There's not really much going on in terms of their flows, to be honest. It's kind of lackluster. We're currently at the 2018. So from the 2018 bottom of the whales who've been withdrawing from exchanges, let's take the absolute bottom of 2018. Their most favorable cost basis is where we currently are, 23,800. So kind of remarkable that the whales are at their break even. It really does show just how absolutely brutal this bear market was. And it was brutal. By every metric I have looked at, it was a significant period of time, huge volumes of capital, realized prices you never thought would have got sliced. And this goes to show, right, the most opportunistic whales during the 2018 cycle, their cost basis is pretty much where we are. So, gives you a bit of a scale on things. In terms of exchanges, here's where a lot of those coins have come from, right? For the shrimp and the crabs, a huge chunk of them came out of exchanges. We saw the largest outflows both in June and then again just before, but then following FTX, of course. It's been really flat since, right? Exchange balances are literally grinding sideways. Now, again, I don't use exchange balances as kind of the go-to be-all, end-all, but they are a piece of our information set. So really what we're seeing here is it's pretty flat. And to me, this kind of just speaks to a bit of a return to normal. The market's not exactly pouring cash in. I think that, we've got overall positive market structure, and I do think that there's still probably potential to the upside. But we're also not seeing anyone chomping at the bit and saying, well, it's going to 50K tomorrow, so I've got to buy as much as I can. We're a little bit at neutral. We really are like in neutral gear. We're at equilibrium. There's very little force pushing us in either direction. I would not be surprised if chop is actually what kind of comes of this whole thing. There's just not much momentum in either direction, which is, it's not the worst thing, but it's just kind of cooling down, consolidation, so to speak, kind of what you would expect actually within a consolidation period. Now, miners have also, they've seen a massive distribution following FTX, right? They got completely slammed and they have essentially gone back to a very neutral position. Their balance is also climbing sideways. They're in a much more financially stable position, but generally speaking, miners are kind of net neutral on a lot of these things. Now, there was one last chart I wanted to just jump into just to close out. Sticking on that topic of yearly absorption rates, what does this mean for whales and for sharks? We mentioned that our crabs and our shrimp are seeing very, very significant increases. Where are those coming from? Well, we can see that they're clearly not coming from our sharks and our fish, right? So our sharks are seeing a plus 27%. So they're absorbing 1 in 4 coins that are being mined over the last year. So, you know, it's a significant amount of buy side coming from these particular entities. So a lot of the coins that we are talking about here in terms of where did they come from, they're actually coming from exchanges, which is kind of remarkable. Now, contained within this particular chart here, this is I've removed exchanges from this one. So our whales were also net distributors relative to the coins that were mined and relative to the overall supply. This is kind of a dominance metric, so to speak. The whales actually reduced their overall dominance or balance by 63% so they basically added 63% to the overall sell side coming out of mined coins. So you've got your mined coins that are coming in, and the red curve here, by the way, that you can see that's kind of oscillating around zero is, you guessed it, the miners. The miners, they oscillate around zero because they pretty much sell everything. So, you know, it's kind of just raw distribution. So in terms of where does the sell side come from, it's coming from newly issued coins. It's coming an additional 63 odd percent coming from miners. And I think if I'm lucky, I've got my exchange on here. I do. Fantastic. And from exchanges, so you've got 100% of mined coins coming from mine supply, 63% of mine supply coming from our whales, and exchanges minus 100 and let's just say 80%. Right. I mean, it shows you that the amount of outflows from exchanges was 1.8 times the mined coins. So that kind of shows you how the net balance of coins have distributed through the system. What I like to see is that the smallest cohort, the shrimps and the crabs, are actually the ones who are accumulating the most. But in terms of market, where we sit right now, certainly retail still appears to be in a bit of accumulation period. It's not like a urge or a surge of buying pressure. It's just kind of a higher level of sustained. And to be honest, if I just take a very objective look at things, 23,000 still relatively cheap. Like in terms of the grand scheme of things, we look at macro cycles, and you know, if we believe that Bitcoin has the trajectory that it does, and consuming gold and the like, then 23,000 is cheap. In the immediate term, as we discussed a couple of weeks back, you know, we're kind of at equilibrium. We're in neutral gear. There's very little momentum in either direction. Chop and a bit of volatility is kind of expected. So there's not really any kind of momentum at this point in time pushing in either direction, at least from this gauge. Anyway, hopefully that's useful. Let me know if you have any questions at all, and I will see you in the next one. Cheers.